With figures just out, it looks like we're going to avoid a hard landing and experience a soft landing after all. Global GDP is expected to increase just marginally to 3.2% and stay around that for next year as well. The major market indices actually retraced in the past 24 hours. That is, the S&P 500, the Dow, the Russell, but the Nasdaq did particularly well. Crypto is becoming more and more mainstream as PayPal enables business accounts to buy, sell, and trade crypto directly from their PayPal and Venmo accounts. In other crypto news, Caroline Ellison was sentenced to 2 years for her role in the FTX crypto fraud. Gold has been hitting new highs and records again and again and again. If you're liking the video so far, please smash that like button, and much gratitude to Shah and Al, who offered a partial masterclass scholarship. Your name could be here. If you would like the masterclass scholarship, please reach out on this link. It's in the description of this video. Thank you again to Shah and Al. With so much news flying around all over the place, it's very easy to get lost in the details. Well, the major detail here is that Bitcoin cannot get above $64,500, not yet anyway. And we do look to be seeing some degree of weakness across the crypto market, and therefore we would expect weakness across the stock market as well. In this video, I'm going to explain what you need to look for and what you need to look out for more particularly. And just keep in mind Rule 225. Bitcoin cannot escape the stock market's gravity. This works in two directions. If the stock market is getting weak, expect Bitcoin to get weak first. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome, and welcome back CTKS family. We can see here that the S&P 500 futures came down in the past 24 hours. The Nasdaq also came down, but it did quite well overall. The Dow was weak. The Russell 2000 was weak as well. This has consequences for not only the stock market, individual stocks, forex, and also commodities and crypto. Unfortunately, a lot of people just believe what they read in the media. Why would you do that? That's a crazy thing to do. The media is not your friend. It never has been. Look at this. This is the correlation directionally between the S&P 500 and Bitcoin. Notice the blue line, which is Bitcoin, and the white line, which is the S&P 500. Are they following each other? Yes, tick. What about the Nasdaq futures? Yeah, tick as well. And what about the Russell 2000? Yes, see this divergence. This is something that you need to put on your radar. What about the Dow? Yes, it's following. If anybody says the stock market and crypto are decorrelated from each other, they're not statisticians. The proof is incontrovertible. That means it's solid. Look at it. You can see it with your own eyes. Please do not be conned. We've seen a degree of weakness across the main markets. We've seen negative pressure start to build in the major indices, even though they're hovering around all-time new high levels. And what is causing that? A rebasing of the VIX. The VIX is starting to gain momentum. When we look at the put-call ratio, it's been very bullish, but it's potentially moving to the bearish side. We saw a flight to safety in the past 24 hours into the DXY. When the VIX increases, we expect the DXY to increase and Bitcoin and gold to get hit. Please be aware of these intercorrelations and interconnections. Specifically, we had such an incredible rally inside the stock market as the VIX broke down from this very key 1780 level of structural once support, falling through a negative fresh air gap into the 1620 area. As this occurred, the major indices went nuts. They just went up and up and up. If you invert the VIX, you will see how it closely tracks the major indices, but also Bitcoin. Now, what is happening at the current time? We can see this 1520 level is very important. If the VIX falls below 1520, expect a breakout to all-time new highs on the S&P 500 and the Nasdaq. But if it gets above this 1565, especially 16, expect the indices to retrace. As a community, we look at intercorrelations and interconnections. Junk bonds is incredibly important, but very, very few people look at it. Junk bonds just means that it's really, really high-risk debt. The economic system is run on debt, and junk bonds have come into a level of structural overhead resistance that I've covered in previous videos. We expect this flatlining or at least a dip before we re-challenge this level. This is what is causing that weakness inside the markets. Also bear in mind that the charts tell the truth, the absolute truth, and nothing but the truth, so help us. And what are we seeing with gold? Gold is doing really well, but it's flattening out at the current time. This particular green line was drawn at the start of the month when gold was marked up through its indicator, and it's not changed. These lines are not changed. We're following the normalized positive price path, and we're literally set to close out on this level. If the VIX spikes up, we would expect gold to get hit. So just be aware of that, because if yields spike up, gold will in all likelihood spike down. And if the DXY spikes up, if a DXY spikes up, we would expect gold to retrace. Price is always moving in a wave. The up and down motion of price is something that you need to get used to. But the most important thing, please disconnect yourself from mainstream media news headlines. They are unfortunately very misleading. At this current time, it's very important to look at the inverted VIX. The inverted VIX will give you a very good signal on where the market is heading. This blue line is Bitcoin. The candlestick pattern is the S&P 500. We have a substantial amount of structural support around that 57.18 level. And you can see that we came back, tapped it, tried to break out, but have since broken down. If we start to move down because the VIX is spiking up, that will cause the inverted VIX to spike down and to lead a direction for the S&P 500. If that occurs, we would expect to move down to this 5700 area, where there is a degree of structural support. Also note how closely this blue line, which is Bitcoin, is following the S&P 500. It's not a one-to-one relationship. Don't get caught up in the S&P must go up and therefore Bitcoin must go up. It's an on-average relationship, but we can see they're following very, very effectively. Now, what does it mean if the S&P 500 can't get above 5722? If it can't get above, the next structural level is around that 5758 mark. If it can't get above, it's going below. If it's going below, we expect 5700. If it's coming above, we expect 57, around 5760. Please just bear in mind, there is weakness inside the market. If you're prepared for a pullback, you're very sensible. We saw in the past 24 hours that the Dow and the Russell 2000 showed a tremendous amount of weakness structurally. The S&P 500 and the Nasdaq did quite well. The Nasdaq was the best performer. But when you look on a directional correlation basis, this particular movement over the past 24 hours in Bitcoin has brought down Ethereum. It's brought down Binance Coin. It's also brought down Solana. It's brought down XRP. It's brought down Doge. But you can see this is not an exact here. And one of the things that happens with meme coins can be the first to rally and the last to go. So memes are not a bad idea to look at. But of course, we can still see that directional correlation. When Bitcoin is selling down, we expect the memes to come down. Maybe not instantaneously, but certainly so, to come down. We can see ADA coming down with Bitcoin's gravitational alignment, and also the entire crypto market came down as well. That means it's very important for us to understand the structural levels on Bitcoin. When you look at a chart of Bitcoin like this, it's really difficult to figure out what the heck is going on. But if you put it on the structural levels, you can see that this structural resistance around that 64,642 mark was hit again and again and again, and it failed. That means we came down to try to convert this one structural resistance into structural support at 64,409, but we failed. There was a negative fresh air gap there, which meant the price could come down fairly hard and could potentially take up to 3 levels to just get caught. And we did catch it for a while, but it showed weakness as the Dow and the Russell 2000 came down, and we're now seeing continued weakness. So it's very important to be aware how all the world's markets move as one. They're not separate. What we can see is that charts are moved by other charts. That's rule 448. Specifically, your chart, no matter what you're trading and investing in, is moved by other charts. Knowing how other charts move and how they impact your charts should be your life study. Or else, unfortunately, you are going to lose money, and a lot of it. Those up and down movements inside charts, they're not random. Remember when we looked at junk bonds? Junk bonds is hitting an overhead structural area of resistance. This means that times are getting tough for the major indices and the subcomponents. If we look at the VIX, we can see that the VIX is basing. If the VIX is basing and it actually starts to go up, it will throw weakness across all markets, including crypto. Getting your structural levels together is vitally important, so please make sure that you're looking structurally at Tier 1, Tier 2, and Tier 3 charts. Please make sure you're looking at the VIX and the DXY as well as junk bond structural levels. You should also look at total crypto market cap structural levels as well as Bitcoins. They're really quite important right now. One of the things we can see inside the crypto market, crypto came up to challenge this $2.208 trillion level. It mildly got above it but couldn't confirm each time. It's just come down, and that's as a direct result of how the major markets are moving. If we start to lose this, and unfortunately we are in the process of getting weaker, that opens up a magnetized structural level below. Now, where is that level below? It's down here at approximately that $2.119 trillion mark. And if we just go back in time to try to understand where that could be, I'll just zoom out here a little bit for you. Just look in your charts for this particular fingerprint pattern just here. That's where we're going to start to pick up structural support again if the VIX starts to spike. Always have your three-dimensional thinking on at all times. Understand that the markets can go in 3 directions in a single 24-hour period. They could come up, they could come down, they could consolidate. We see this all the time. And inside crypto, things can move very, very quickly. So you want to take advantage of that volatility. Make sure that you're also reading across charts. I'll spend a lot of time inside the Profiting from CTKS Method structure course coming out very soon, describing how you can do that. Understanding intercorrelations and interconnections can take a while because apart from our community, I don't know many communities that even talk about it. For example, with Ethereum, this white line is the Russell 2000 futures. Notice how the Russell predicted a weakening inside the crypto market. And if you were paying attention in the last 24 hours, you saw it too. That can give you a bit of a direction as to where the main markets and crypto could be heading. But to understand where Ethereum could be heading, please look at Bitcoin and total crypto market cap structurally, and also look at Ethereum structurally. So let's just do that. Just looking at Ethereum structural levels, we can see that this 2581 mark is a bit of a problem. We're residing below a structural 1 support level, and there's another one right there at around that 2575 mark. these two levels have managed to capture and rebound, at least flatten, Ethereum's price structure. But unfortunately, if we can't hold this 2575 level, we're heading down to the structural support level below at 2537. But the good news is, if we can get above that 2590, that puts into play the 2670 area. Looking across charts, especially from a structural perspective, is incredibly important, and I'll spend a lot of time doing this in the new course. And if you're in the masterclass, if you've done level 1 and level 2 standard certification, or an active member of the CTKS Method service, you will get that course completely free. The free course registration is in the link inside the description of this video. Please make sure you fill it out, because after the 9th, it's all closed. That is, no more freebies. The reason it's so vital to look at Bitcoin and total crypto market cap, for example, when we're looking at Solana, if Bitcoin is coming up, the probability is very high that Solana is moving directionally with it. If Bitcoin weakens, the probability is very high that Solana will weaken. If Bitcoin is coming up, very high the probability, you get the idea. And if it really goes down, the alts are going to go down with it. But if it comes up, the alts are also going to come up with it. This down and up dance is played out across the entire crypto market. That makes it really important to know the structural levels on Bitcoin, total crypto market cap, and the chart that you're putting money into. So if you were putting money into Solana, what you want to keep an eye open for right now is around this 146.80 mark. There are two levels of structural support just here at the current time. We're still under negative price momentum, and unfortunately we are weakening in terms of Solana's price. This is indicative that the VIX is potentially starting to spike up and the DXY is gaining momentum. If you understand how the charts intercorrelate and interconnect, it is literally money in the bank. It will take you a while. It's a different way to think. And like I was saying before, I don't know of anybody else who teaches it. Also, keep your eye on the structural levels, especially around that 144. Because price is always coming down and then going up, you can make a lot of money in these different waves if you're paying attention. Therefore, we don't really care what direction the market is going. Obviously, it's easier to make money in an upward trending market, but even in a downward trending market, we have these retracements. Your psychology will largely determine your profitability, and it's very easy to get negative inside financial markets because there's so many doom and gloomers out there. If they're not permanently bearish, they're permanently bullish. Both extremes just drive you crazy because the permanent bears and the permanent bulls are always talking. And the media just picks a side based on what the news is just reporting, the actual current price action. Always remember that if you're going through a life pullback, that will give you strength for the next life rally. Just stay dedicated and committed. Know that you either win or learn. And if you are not blaming, you'll learn that lesson, and the cost of the lesson will de-escalate because you can tick that box. You've learnt it. And it's a very good thing to know that opportunities in life do reset daily. So every day you can do what people are just not doing anymore. You can show kindness, integrity, and gratitude. This world has become belligerently aggressive and unkind. Unfortunately, people, for whatever reason, are lacking fundamental foundations of integrity and gratitude. The whole world is caught in blame. And blame leads to anger. We talk about positive excellence inside our community, and it's literally all about doing the right thing by yourself, especially when no one is looking. And well done to everybody who did the intercorrelation and interconnection, the directional correlation. You are awesome. I thought we could talk a little bit about kindness in today's comments, because kindness is incredibly important. Kindness is actually the foundation of happiness. A lot of people aren't happy because they find kindness very, very difficult to exhibit. That is a really good thing to talk about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.